Hello traders, Thiru Nagpan here, founder of Master the Markets, Elite Traders Conference and the Traders Open Day. So today I just want to talk to you about the 3-step trading methodology. Now what is the reason for even talking about that? Because you see, over the 20,000 traders that we have coached and all the conferences and the seminars that we've talked at, traders usually come to us and they say, you know what, Thiru, I'm just having difficulty in basically constantly executing my strategy, or I'm just not getting anywhere. I earn my profits, sometimes even 2 months consistent and I lose back all my profits, or even sometimes just in a week, I earn a few profits and I lose it all back. And I'm just not sure how to get it constantly progressive and also gradually profitable. How do I do all these things? And this is when usually we talk to them and we ask them whether they do have these 3 steps. These 3 steps, which is so critical to making a trader successful. Not only successful in terms of just profits alone, but to also review his strategy so that he can see where he's going wrong and what to optimize and what to correct, so that then he can then push his equity curve to positive territory. So let me go through these 3 steps, what they really are. The first one starts with the S, okay? Now that is what we call the strategy component, okay? And that's what most traders are really all after. Strategy after strategy after strategy, okay? Now that is only 1/3 of the whole 3-step methodology, okay? That's what I want you all to understand. Now in this strategy component, what are we really looking at? Now in the strategy component, you need all your rules to be written out, okay? What kind of rules are we really talking about here? We're talking about 3 main categories. I'm not going to delve into this much really further, but I'll just touch on them. You're talking about entry rules, stop loss rules, and target rules, and they need to be further subcategorized as well. For example, the entry needs to be done into pre-entry and post-entry rules, like your re-entry rules, all right? Maybe I should just say re-entry rules. Next, the stop loss, initial stop loss, trailing stop loss rules, and finally your target, which is pre-target rules and intra-target rules as well, okay? So you need to write all them down. And the one most important word in this whole rule writing that you definitely have to do as you're writing your rules is what we call, and it starts with a Q, okay? It starts with the letter Q, and that is called quantification, okay? Quantification, because if your rules are not quantified, the second and the third steps totally become redundant. All your time and effort and money that you put into the market totally becomes a waste, okay? So you definitely need to quantify those parameters, and the best way to quantify and to know if you quantified it properly will come on the second step. And now the second step is what we actually relate to, is the psychology component, okay? Now let me tie it all up together if you're still wondering what it all means and how actually this quantification actually relates to the psychology component. Let me explain. Now you see, in psychology component, what we are actually looking to achieve when you actually master your mind and it's in stability, when your emotions are stable and your intellect is in alignment, what we're really looking at is basically towards consistent execution, okay? Consistent execution. Now, here's the thing, right, traders? Now, pay attention to this, because if your parameters, if your rules are not quantified, you will not be able to consistently execute it. It's like, for example, a fitness instructor telling a guy, just to lose weight, just go and exercise regularly. The guy goes back home and then he thinks, okay, yeah, that makes sense, exercise regularly. So he wakes up tomorrow morning and then he starts to think, okay, what does it mean by exercise regularly? Does it mean I just go walking every day, or does it mean I go running? And even if I go running, it's like, how much distance do I need to run every day? Or what times do I need to run? And what speed do I need to run? Because you see, if he doesn't know all these parameters, he can't constantly execute as one, right? And he won't be able to totally quantitatively assess at the end whether what he did was right and how can he improve, because there's nothing to compare against, because firstly, it was not even consistently executed, okay? And for consistent execution, the most important thing is your psychology component, and you need to keep working on your mind, traders. I can't stress to you how important it is. Paul Tudor Jones, one of the most top UK traders, right? One of the top millionaire traders, He keeps working on his mind consistently. Ray Dalio, who's got one of the biggest hedge funds in the entire world, Bridgewater Associates, meditates every morning. Continuous work on the mind is so critical, okay? And we over here at Master the Markets, we continuously self-developing ourselves and continuously working on this mind, all right? So very important. Final thing is what I'm saying. Once you got consistent execution and you got quantified parameters and you consistently execute, the last one is what we call the optimization component, okay? The optimization component. Now, the whole purpose of the optimization component is towards, it comes from stats review, okay? Stats review. Now, here's the thing. I think most of you would have figured this by now already, because if you do not have your parameters quantified, and from quantified parameters, you're not consistently executing it. That means, for example, the fitness instructor telling you exactly what to do every day, but you go back home and you get lazy. Some days you don't wake up early in the morning. Sometimes you don't run in the morning every day. You know, all that things that happen. If you don't consistently execute it, then finally when you assess those results that you get from your weight loss regime or from trading itself, what happens is that those stats become invalid. They become totally invalid, insignificant, totally redundant. Right? So all that effort that you put in, all the quantification, all the consistent execution, all becomes totally useless because those results are no use anymore because they were not quantified first, then therefore you cannot constantly execute. And therefore, what stats is that to see? You know the crazy thing that comes to my mind is one of the other, so many traders, like, you know, just the other day, two weeks ago when I was just coaching this trader, he was one of the very few people who raised his hands up when I asked it at the last seminar that I was doing. And I was asking the traders over there, he said, how many of you guys got a trade log, okay, to like analyze your stats? And only like one or two guys actually raised their hands, and he was one of them. And finally, when I did a one-to-one coaching with him, and then I asked him, like, okay, show me your trade journal, show me all your stats. And he showed it to me. And the immediate question I always ask before I even analyze the stats is that, hang on a minute, was this all consistently executed from quantified parameters? Can you show me a strategy rule sheet, please? And the guy, you know, can you believe it, what he just said? I mean, I heard this thousands of times, right? So it doesn't really surprise me anymore. But he just said, no, I actually don't have some strategy rules. And I was like, okay, fair enough. I mean, I'm not surprised anymore because out of the thousands and thousands of people that we have coached, we've heard this so many times now. And he was shocked himself. He himself agreed that he was not doing the right thing. And that's why for 7-8 months, he was not making even any profits. So this is my point. I mean, even though you may be trade logging everything, but if your parameters are not quantified, therefore, if your parameters are not quantified, there's no way to constantly execute it. Your stats is totally useless. You can just bin it. All your time, money, and effort is totally gone to waste. So traders, do it right, okay? Do it well. And to do it well, you got to do the 3 steps, right? The strategy component, psychology component, and optimization component. Now that is a very, very good way of you getting into a very good pattern of improving your trading and keeping it sustainable and consistent. Most important thing out of here, as I said, is the stats review. And if your stats are not good, then you go back into the strategy component, tailor your parameters, and go back into the steps again. Now, once it's achieving satisfactory results to what you want it to perform to, and is consistently making money, then you have a strategy that you can replicate and scale. And after that, you're monitoring its performance. Okay, so that's me on this 3-step trading methodology. Totally believe it's been very, very useful because it's so critical. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.